Mumbai, private segment loan specialist HDFC Bank on Saturday announced a 19.6% year-on-year YOY ascent in net benefit to 6,659 crore rupees for the 3 months to June, inferable from an ascent in net premium salary (NE) and lower charge outgo. Be that as it may, its benefit was lower than 6,809 crore rupees assessed by a Bloomberg survey of 15 investigators. The bank's net premium pay, contrast between premium earned and intrigue exhausted, developed 17.8% YOY to 15,665.4 crore rupees. Its net intrigue edge, a key proportion of productivity, remained at 4.3%, unaltered from a similar period a year ago. HDFC Bank's advantage quality improved in the June quarter, with net terrible credit proportion or the level of awful advances to add up to propels declining 4 bits per second YOY to 1.36%. Its net NPA proportion was additionally down 10 bits per second to 0.33% in Q1 FY21. Be that as it may, contrasted with the March quarter of FY20, HDFC Bank's gross terrible credit proportion was up 10 bits per second. The bank said in an explanation that in accordance with the extra administrative bundle rules dated the 23rd of May, the bank allowed a second 3-month ban on portions or enthusiasm, as pertinent, due between the 1st of June and the 31st of August. For every such record where the ban is in all actuality, the advantage grouping will remain stopped during the ban time frame. For example, the quantity of days past due will prohibit the ban time frame for the reasons for deciding if a benefit is non-performing, it said. HDFC Bank likewise said that it holds arrangements as at the 30th of June 2020 against the expected effect of COVID-19 dependent on the data accessible as of right now. The arrangements held by the bank are in abundance of the RBI-endorsed standards, it stated, without uncovering the quantum of arrangements put in a safe spot for COVID-19. Its all-out arrangements remained at 3,891 crore rupees, up 49% from a similar period a year ago. The bank's all-out advances were at 10.03 trillion rupees in Q1 of FY21, an expansion of 20.9% over a similar period a year ago. The residential retail credits developed 7.2% and household discount advances developed 37.6%, it stated, including that the local advance blend among retail and discount was 48 to 52. Abroad advances comprised 3% of absolute advances, the bank said. All-out stores remained at 11.89 trillion rupees, an expansion of 24.6% more than the 30th of June a year ago. Its current and bank account (CASA) stores became 26%, with investment account stores at 3.27 trillion rupees and current record stores at 1.5 trillion rupees. The bank said its CASA stores presently contain 40.1% of all-out stores starting at the 30th of June 2020. HDFC Bank's absolute capital sufficiency proportion (CAR), according to Basel III rules, was at 18.9% as on the 30th of June, as against an administrative necessity of 11.075%, including the capital protection cradle of 1.875%, and an extra prerequisite of 0.20% for being a domestic systemically important bank (DSIB).